How's it going, guys? Welcome to the recap for the London session for Friday, the 18th of March 2022. So, 4 hour chart. You guys have probably heard me saying this. I'm not totally convinced about this being kind of true swing structure. Obviously, with the volatility changing and us kind of using pip rules that are not based on a lot of data. That's why I'm a bit and ahhing about this, because really after this break of structure, nothing within this leg looks like a significant pullback compared to the current sort of price legs we're seeing. Really, there's a solid argument, and I know a few people are viewing their current 4 hour swing structure this way, but that is one big leg down, and now we're having the pullback, right? So that would give us, for the 4 hour chart, the exact same sort of swing range as the daily chart, right? So in that instance, we haven't quite pulled back up to the EQ, right, or the premium. That said, if we do classify this as a swing structure, we try and keep it mechanical and we use the 40 pip rule, then we have come up to pretty much the exact extreme, right? We're about to, if it's going to break and close above this line, then you can view that essentially as bullish, okay? So for me, it's a little bit of a tricky one in the back of my mind, and this is a problem when you're bringing in discretion and you don't have a very solid fixed rule that you're happy with. But that's just kind of the one downside of using the pip rule when volatility does change. So the way I kind of approach that in my mind is I'm kind of just viewing it sort of two ways and just being a bit more sort of nimble with my approach. And I understand that's a little bit frustrating when you're new, or you just want that very simplified approach. So if you are kind of one of, you're leaning more towards that, then I would just say keep it simple, stick to 80 pips, right? That is your swing high, that is your swing low. We've come to the extreme. We're now expecting that movement there to take out the low, right? And just keep it nice and simple regardless. So in that case, we had swept this high, obviously mitigated whatever supply is left within that wick, and then we're starting to retrace coming into London. Obviously need to be aware of these 4 hour demand zones here, and if you are looking for that short to come into this low, I would at least want to see that supply zone fail, and then to get your 4 hour bearish chalk as well, and then potentially we may start to get that move, okay? Now bringing in my discretion into things, what I think is more of a likely scenario, since we essentially broke out of this supply chain here, remember where we've seen these mitigations, and then we've started to break up, especially now that we've kind of broken and closed above this high here, right? We kind of look at this sort of, more sort of larger internal swings. That to me looks reasonably bullish, and I'm kind of expecting this sort of higher low, sort of internal higher low to form within here, right, and push up higher. But that's me bringing sort of my discretion and nuance into that. A thing that kind of backs up a lot is that we're coming off major monthly, weekly and daily extreme demand, right? So it makes sense that we may see that deeper daily pullback up into sort of the more premium of the range. So that's kind of how I'm viewing it at the moment. Okay, so coming into London, basically the trade idea is to look for shorts potentially into this demand level, right, to then look for the continuation of that trend, or potentially we'll switch bearish temporarily on the M15 to mitigate the continuation of this demand chain, right, to then continue up. Or the sort of potentially lower probability scenario would be that we get our 4 hour bearish chalk, this initial demand zone fails, the M15 switches bearish, and then potentially we may do something like that. Or we may just do that to use that as liquidity and continue to the upside. So they're kind of the few scenarios I would be looking at, but the main one I was focusing on was ideally price was going to pull back into here, and then we just look for that move. That was really the main thing I was waiting for. So M15, very clear swing trend that we're within, right? This being the swing low, that was the last break of structure. That's pretty much one straight movement up, okay? So that's the current swing range we are playing within. So very simply, was looking for price to come into that grey box, that 4 hour demand zone, where we had 3 M15 demand zones, right, within here, okay? All three of those flipped this larger supply zone here, although it's not the cleanest. We'd already had a few mitigations, so technically it had already been flipped once this initial reaction had failed, okay? So this whole sell to buy here technically was that flip range, which price then came and mitigated and continued to the upside. But even still, you can kind of, I guess, technically classify all three of these still being demand that led to the supply eventually failing. It's just a little bit kind of, less refined. What I would classify as a much clearer flip zone would be this movement here, right? Where we came into this extreme wick supply, we reacted, clearly failed to put in a lower low, and then pushed up, okay? So this one for me is a clear flip zone. Did it sweep liquidity? Not sort of, yes, no, it's a bit messy, right? So we have this pullback, we then move up, which means this is like an internal low, right? So we come down, we sweep that low, and then we continue up. So yeah, that's a sweep there. Arguably we sweep this inside bar. If I had to say, yeah, I would classify it as a sweep zone, but you can see overall it's just a little bit messy, right? It's not the clearness. It's not when we get a nice movement up, right, a pullback, and then we get the movement, and that's a sweep of the low, right? That's typically what we look for. This one obviously didn't sweep anything, has no inducement, and then this can become inducement for this zone below, right? This being the kind of the extreme unmitigated wick. Okay, so for me this is a valid M15 POI, but I just don't like the way the zone formed. It's just a bit messy, right? It's got a nice sweep of liquidity, but you see the way it kind of has this big wick, then the candles kind of come down and sort of mitigate a little bit of it and then continues up. I don't like that. Typically I like it if you can draw it from the top of the wick, and then these candles went here. These candles had kind of just continued upwards from the close of that body, rather than kind of dipping back into it, filling up some demand and then gone. So I kind of see this wick is partially mitigated. So this is kind of more like, I don't know, an M4 or an M5 zone or something. It's just messy. Anyway, so yeah, coming into London, we were around here. I believe we had a bullish change of character, okay? And this is where I marked out this demand zone. And I said, this basically is a demand zone that is very, very low probability. Why? Well, one reason is it hasn't mitigated anything significant. Yes, there is this sell to buy wick POI, right? So yes, it has mitigated that. And it could have done this and continued to the upside. But, when you have to kind of look at everything together, right? And use a little bit of nuance here. The 4-hour chart, if I can get it back up, is still overall bearish, regardless of how you map swing structure, whether you're looking at this larger swing or you're looking at this swing structure, right? Either way, it's still bearish, okay? So you have to bear that in mind. We have just broken that high. So even though it's an internal high, what would we expect? We still expect some form of pullback, even if it's just down towards, this internal low. That's another bit of bearish confluence. Also, when you get a big swing range like this, right? It's obviously quite a volatile run. It's quite, a lot of pips, 120 pips or so for an M15 swing range is pretty big. Typically, you're going to see price continue down. Like if you look at these swings in price, right? That's the sort of the more obvious swings in price. And then once price comes into this level, that's when it becomes a little bit higher probability. Now, the other thing as well, when you have these sort of large ranges, is this is the one time where even though it's pro M15 trend, you still may want to wait for an M15 bullish chart, right? Because there's plenty of risk reward, there's plenty of room to wait for that to happen first, because clearly, right, supply is in control at the moment, so is the internal structure being clearly bearish. So you can wait for a clear supply fail and a clear M15 change of character. You don't have to jump into the first M1 entry. Now that we have pulled well into the discount and we're within a 4-hour POI and we're kind of coming down into these extreme M15 demand zones, I am more than happy to look for an M1 entry within here. But kind of when you're looking for entries up here, right, we're barely in the discount. There's a lot more higher probability of mitigated demand zones below. You want to be a lot fussier. Generally, what you want to see is you want to see a big build up of liquidity, a big sweep, a strong bullish change of character to the upside, supply fail. You can even wait for like demand to start to be respected first, and then you can look to get involved, right? You want to see a lot more typically. It's it's valid to take it along with from within here, right? It is an M15 demand that causes internal break of structure, but zoom out, look at the bigger picture a little bit, and you can see that you're just kind of forcing longs within here. Just be patient and wait for price to come down to this level. It's a lot higher probability, right? You don't need to be first in. I don't know how it's. These are kind of these things that you just pick up with a little bit of experience. It's kind of hard to give you very, very crystal clear criteria of when and what to wait for, but I don't know, hopefully it's kind of clear of like just be patient and wait for price to clearly come back to the higher probability area, and don't be trying to like get in on the first sort of M15 change of character that can happen, especially when you can see that it's just basically pulled up to mitigate supply and then continue to the downside, right? So that's kind of, I guess as clear as I can make that. So once price came into this M15 POI, I was looking for an M1 entry, but as we'll see in a bit, let's take a look at that now actually. So price came in, okay, so we can do a bit of a replay here. So at this point, did not have this drawn on, but price is coming in, alert's gone off. All right, nice big build of liquidity in front of it, decent. Let's wait now for an M1 change of character. So we start to pull back, then we take the low. So now, did we? Yeah, we did. So now I draw on where my M1 shock line is, and I'm simply just waiting for that line to go. Okay, we continue down. Okay, nice bit of bullish pressure coming in. So that's what I want to see, right? We want to start to see that big orders are being filled. Now we need to wait for the M1 shock, and now potentially we're going to get M1 supply fail. We can get the flip. So we react from that. It's okay, cool. So now all I'm waiting for is for that M1 red line to be broken, and then I can start to look for an entry. But we don't get it. So, and then we jump down, okay? So then when we break that low, let me bring it back a bit. Well, actually, it just kind of happens in one go, so it's going to be a bit hard to draw. But essentially where the M1 shock is once this low here breaks, where's the nearest high? It would have been that inside. Well, hang on. Let me bring this back properly. Let's see. Okay, so as we know, right, the next candle from this candle onwards breaks this low. So at that point, right, as the candle's forming, so as price prints from here and it goes down, as it initially goes down, obviously it happened in seconds, right? The high would then go from where it was up here to here, because once this low breaks, the active internal low, where's going to be the nearest internal high? It would be this candle here. But obviously with the next candle in one go, it then breaks to the upside, right? So that's where you get your bullish change of character here. Just draw this all in. Okay, so it goes down actually. So it actually went up a bit first and then went down. But anyway, it's all a bit messy, but that's where your M1 shock would happen. From this point onwards, whenever I see big, excuse me, massive, wicks like this of volatility, generally I just stay away because it's not that clear, it's not that great, it's a little bit hard to trade. But also the main thing for me was what had happened here, right? The M15 POI had failed. Okay, so now if I'm going to look for an entry, what do I need? I need to see an M15 change of character from a 4-hour POI, right? If it's not within an M15 POI. So I can only trade M1 entries once an M15 POI has been mitigated. But at this point here, the M15 POI had failed. Okay, so now all I'm trading from is the 4-hour POI. But because 4-hour POIs are obviously massive, I need that to be an M15 bullish change of character, so that I'm then trading from an M15 POI. So I need to see that high go, right, get the chock, and then come into demand, and then that would be valid for me to trade. Okay, otherwise, going to sit on my hands, I'm going to wait for the next M15 POI to be mitigated. Okay, you don't have to do that. You can trade 4-hour POI rejections with just an M1 entry without the M15 POI being there, but I wouldn't recommend it, right? It's a lot harder to do. You want much cleaner price action. Ideally, you want to see sustained bullish M1 order flow, or at least it be further down in the 4-hour POI. You don't want to be doing that on its initial 4-hour mitigation, especially when it's countered to the 4-hour trend as well. So if I can make that crystal clear, only trade essentially like the M1 entry, the M1 chock, once an M15 POI has been mitigated. In this case, it had failed, so you can't do that. So now you either need to wait for the next M15 zone to be hit, or you need to wait for that M15 bullish change of character, because that will then give you an M15 POI to then trade from. Okay, hopefully that makes sense. And then you can stay away from this mess. Because really, where are you going to enter from? Because yes, you have this M1 POI here. It's actually a really nice flip because it flips this level here, right? Price reacts in, comes down and pushes up. But just when you've got this big wick here, I can't think of a lot of examples where I've traded this or where I've backtested this, and I don't really, if I'm honest, have a clear way in which I would be confident in knowing where to set my order or where to look for an entry. Or at a minimum, you would want to see price come in, right, and then give you at least an M1 confirmation entry from that level, right, something clear. So when it's like this, that's why I was just staying away. And you guys obviously see I'm not usually that active in the Discord during sessions because I want to be concentrating on trading, but I was not more active because once I saw this, I'm not interested. I'm going to sit my hands and wait for something a lot clearer, right? I don't need to force it. So yeah, if this was still in session, I'd be looking for clear M1 entry within here, or potentially from the extreme, but I kind of already explained why I'm not a big fan of the way this zone formed, but it can be worth the risk because obviously it's the M15 extreme, so that's where the highest RR trades are always going to be, right, if the trend is going to continue. Now it's out of session. I'm done for the week, I'm done for the weekend, I'm going to be out of office, so I'm no longer interested. But if you guys are trading New York today, if it's during session, then I'd be happy enough to look for entries within here. But of course you can still look for shorts as well, potentially if you want to try and anticipate that the 4 hours is going to stay bearish from here and continue to the downside. But then again, we're already in 4 hour demand now, so I wouldn't be looking to do that. Where kind of the counter M15 trend shorts made a bit more sense wasn't it around here, right? So if you're kind of trading pre-Europe from this M15 supply mitigation or some aggressive M1 continuations within here, I know a few of you caught that within here, so we can take a quick look at that. As you guys know, I don't really trade M1 continuations that much. They are probably my weakest point, especially further in the leg, unless you see very clear kind of sweeps of liquidity. and a series of mitigations where you can see order flow. That's kind of the only time that, at least me personally, I can make sense of it, and where I can see all a setup that makes enough logical sense, which is one that was within here. Okay, so this is something I can see and I mark up, but I don't typically execute because it's tricky. It's a lot tricky to trade. So essentially what you get here is your M15 chock. Okay, so the internal structure is then back in line with coming down into demand, so you can look for a continuation, right? Because we're expecting order flow to pull back into this 4 hour and M15 demand zones, right? So once we get essentially the initial sweeps of here and here, right? So we've got a series of M1 sweeps. Let me just draw this one. That's not the one I wanted. There we go. Cool, so we get a sweep of here, and then we get another sweep of here. And then we essentially mitigate, right, this M2 supply zone here, okay? So that would not be an entry, because how do you know that it's going to be this one that price is going to mitigate? Because you could set an entry in this one, you could set an entry in this one, right? And you're going to take a few losses. So that's not really got strong enough of an edge for me to want to set continuation sell limits on all of those orders, right? So what you want to see first is price start to sweep, and then it starts to give you your bearish changes of character to the downside, right? So then you have an M1 chock here, I believe. Yeah, so that would be your M1 change of character. Then you can start to draw on some supply, right? So now you can try and follow the order flow a little bit, right? So yes, it didn't quite hit the mitigated M1, but it did come into the supply range, right? Which is essentially your M2 supply. So then we come down a bit, we react to this demand level here. Okay, so again, I wouldn't necessarily be looking for entries within here because it's all just messy. There's nothing that clear. But when we react to demand and then we push down and fail, right, now you can paint the story a little bit more. So we have another mitigation here. So you can start to see the order flow starting to kick in, right? And now this gives you a much cleaner level to be looking to trade from, right? You've got more sweeps within here. So you can see how you're starting to paint the story a little bit more. So mitigation, demand's failing, multiple sweeps. Clearly overall, right, the order flow is bearish. Now, the only thing that I really didn't like about this was that this movement here, it failed to really break and close below that swing low. So typically what I prefer to see is at least like price clearly break that. And then if you're looking to trade that continuation, well, it's gonna have to go from here. Otherwise we're gonna be coming up to these levels, right? Why? Well, because look, you're following the supply chain. This is all mitigated. So this is kind of the unmitigated level of this level. So that's why then you have a decent edge to short from here if you kind of want to take that aggressive counter trend. So yeah, wouldn't recommend this kind of style to the majority of you, right? It's counter to the M15 trend. We're in the M15 discount. We're playing into 4 hour demand, etc., etc. But just kind of to talk through there, the kind of more aggressive M1 setups you can take. But yeah, I really wouldn't advise this until you're consistent with what I call the bread and butter stuff, right? The textbook setups, pro M15 trend within the M15 extremes. Stay away from this kind of stuff because it's very, very easy to get your hands burnt. A lot of times it can look clear in hindsight, and then you can think, oh yeah, I'm just going to set an order in every M1 supply zone following the order flow, and then you can keep getting caught in all these sweeps. But it's when you see something like this, right, where you can suddenly start to see that supply chain forming, the M1 demand starts to fail, right, then this makes a lot more sense to do that. But if you're going to do it, you want to be in and out with your targets. Quick 5R, set and forget, fixed TP, full volume. Don't mess around with partials or anything like that. That would be the way in which I would approach that. But yeah, this is something I want to work on a lot more for the pro trend stuff, not necessarily counter trend. But you know, we were higher up in the leg, right? So like this was at the start of London or something, and you want to trade those shorts into the long. They're the kind of things that you can look for. But ideally, it would pull back into an M15 POI. But yeah, in this case, it didn't. And then obviously here, right, you can then look for another continuation if you wanted to. There's no, right, that wouldn't technically be a valid M15 supply zone. Why? Because the next candle failed to break below the prior candle's low. So then you can then refine that obviously to the buy to sell wick, which we can see then price spiked into that and continued to the downside. But yeah, anyway, that's kind of my view of London today. Pretty quiet session, to be honest. No real entries there. I thought it was going to set up really clean at one point as we came into that initial M15 POI. However, obviously, loads of rhetoric still coming out from the Ukraine-Russia stuff, which unfortunately is causing these spiky movements. But yeah, but I mean, even if let's say we got a real clean setup from here, I would still be reasonably aggressive with taking partials, just because, you know, it's not the strongest of M15 POIs in terms of it's kind of, you know, further in a leg, didn't sweep, no inducement. I'd be more looking for a zone like this, right, part of the demand chain. You know, I would classify that as a sweep, a little bit more nearer the 4 hour EQ, right? This would be a lot higher probability or potentially even extreme. So yeah. Cool. Hope you guys have a good weekend, and I'll see you all in the next one. Cheers, guys.